Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, on Wall Street, stocks closed higher on Thursday. We're still not enough to recover from last week's losses, though. Fed Chair Jerome Powell said the day before that even if rates rise, the U.S. economy will be strong in the second half of the year. A recession, he said, is not inevitable. What do you make of Powell's remarks, and what's happening in the global markets?
Yes, if you look at the overall market, it seems to be recovering from the continued 3 weeks losing streak that we saw. If you look at the Dow so far this week, it's up about 2.64%. S&P 500 gained 3.29%, and Nasdaq Composite is higher by about 4.02%. If you look at from the peak to the bottom, the S&P was down by 24.5%, and Nasdaq was down by 34%. All that was because of the continued uncertainty about high inflation and affecting the aggressive rate hike. And if that continues, quite a lot of people are concerned that the economic recession is inevitable and it might be coming in sooner than expected. However, though, the Federal Reserve Chair Jerome Powell have said that, and it's testimony to Congress. He has reiterated that the possibility of continued very giant step of raising interest rate will be happening as long as the inflationary pressure remains to be very high. However, though, in terms of whether that will cause the economic recessions to come, he have mentioned that there is a possibility of that, but nevertheless, that doesn't mean that it is unconditional, meaning that it will be happening clearly. So if that's the case, then we think that there are quite a bit of a room for domestic economy to be reasonably okay, given the fact that the overall individuals are showing a very strong fundamentals with the continuation of low unemployment ratios and high income growth. So therefore, we are seeing continuation of recovery that we're seeing for even the futures market right now. It is up by somewhere between 0.6 to 1% for U.S. market.
Right, and Korean stocks strongly higher today too, but they've also taken a real beating lately. A few of the top names like Kakao and Naver up 5–6% today. A bigger rebound on the KOSPI, which was down sharply late yesterday. The currency, though, still holding at around 1,300 to the dollar. Tell us about the domestic market.
Yes, if you look at the domestic market, not until today, we have seen continuation of heavy selling, capitulations, and we saw quite a bit of margin call coming through for the CFD products. So we saw a massive decline. If you look at yesterday, the Kosdaq was down by 4% plus. The previous days also, if you look at the U.S. market, it was stabilizing, but Korea continued to show a heavy net selling. Now, though, today we saw very strong rebound where the KOSPI was up by 2.26% and Kosdaq is up by 5%. I think the main reason for that is because the institutional investors are using this opportunity to buy on the dip as the retail investors are selling because of a lot of the borrow money selling happening at low prices. So we are seeing continuation of recovery that might be coming through in the future. Also, I guess if you look at the economic conditions wise, yes, we are suffering from the high government bond rate that is 10-year high, and also Korean won depreciating to 1,300 marks, and overall with the consumer prices-wise, the PPI, the production producers' prices are rising much faster. All that resulting into negative conditions for the economy. But given the fact that Korea does have quite a bit of a strong competitiveness in the various areas, including the semiconductors and electric cars and batteries and various other industries, we think that Korea is in good positions to show recovery if the global economy doesn't fall into the Great Recession. So I think that's all relative to the valuation. Korea is trading at discount to the book value. It is now at about 0.9 times the book. That means it is extremely cheap relative to any other market compared to the global standard.
Well, finally, just briefly, Mr. Yu, oil prices coming way down from their recent high. West Texas was at $122 a barrel just a few weeks ago, now down to about 104. Dubai crude from 117 down to 102. Where do you see oil prices going?
I think that the oil price rising well above $100 per barrel is not necessarily because of the strong demand, but it's because of the supply disruption that we're seeing because of the Russia and Ukraine war. So this is causing the uncertainty about the oil prices. We do think that the oil price will stabilize as the economy is expected to slow down on the demand side. However, though, it's not going to be falling rapidly to the level of, say, $80 or below. Main reason for that is because, as you know, the supply disruption is expected to continue as long as the war between Ukraine and Russia continues. We think that that is not going to be finishing up anytime soon. We are seeing continuation of Russia trying to establish something with this. The current prices on oils are remaining to be very high, and they are fundamentally reasonably well in terms of their balance sheet. So I think that uncertainty continues to remain, and oil prices are probably expected to trade in a range bound somewhere between $100 to $110.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on and sharing your insights with us. Have a great weekend.
Thank you very much.